Good morning, good afternoon, good evening, wherever you are. Thanks again for stopping in. As always, a free way you can support the channel is to hit that like button, subscribe to the channel if you haven't. But anyway, let's just go ahead and dive right in. What am I showing you? I think you know what I'm showing you. If you're looking at the screen, you're seeing something here that you haven't seen before. And it's a picture of a GameStop redesign, a GameStop social. You see that on the TV screen. You see these nice gaming chairs, some computers set up. So why am I starting out showing you this on the infamous Quadruple Witching Day? It's just to remind you, by way of reminder, that I like the stock. I mean, that's the biggest reason, not necessarily the biggest reason, it's a very big reason why I'm in right now, why if GameStop is down by the time you're watching this, that I'm not selling. I'm not selling any shares. I bought 2 shares this morning. I bought a couple way out of the money calls just, for $5 a pop, just in case today's the day. We have hyped up March 19th for quite a while. I do think that that's unfortunate because this could take a while, because there's things that we've seen. You know that Citadel is all over Reddit, that they're looking at our GME, that they're looking at Wall Street Bets. GME, I think maybe Wall Street Bets too, but I know for sure GME, they made a decision to ban any post that posted positions. And why was that? Because Citadel was jumping all over that. They were using that for their data to try to figure out, this is their full-time job right now. Their full-time job is to prevent GameStop from going up to $1 million a share. Because if that happens, they're wrecked, and they know it. And it is a possibility. You've seen that in other videos, especially the video that I made most recently about a potential FTD squeeze. I'm proud of that video. I would recommend checking that out. But anyway, this picture is just a reminder. I like the stock. Okay? I like the stock. I like the future. I like Ryan Cohen. I like GameStop. And I think that they're going to take a share of the future of gaming. So we'll see where we go from here. But I think 5 years from now, in particular, we are going to see a price that is much higher than it is right now, $200 a share, whatever it is right now. So keep that in mind. But moving on, a couple things that I'm interested in this, and I've seen this pattern developing, is just look at this volume. The volume on the bottom. I don't know if you're used to checking volume on stocks. I was alerted yesterday, and it's something that I've been paying attention to. The volume on GameStop is just getting lower and lower. The supply, does that mean the supply is running out? Does that mean that it's just we're holding, and the little bit of selling that's happening is causing the price to trickle down? But we have a history of supply running low, and that correlating or maybe even causing a massive spike in the price of GameStop. We see that history here. So February, look at that insanely low volume at the end of February, and then the price shot up. And then again, look at this low volume in early March, and the price shot up. And now we're getting to a point again of low volume. And so I don't know if it's going to happen today. I don't know if it's going to happen next week, whatever. But I think the price is going to shoot up again sometime soon. I don't know where. And you know how it goes, as when the price goes up, we see ladder attacks and things like that. But I expect sometime soon for a similar shot up after we see this period of low volume come to an end. So keep that in the back of your mind. And next, here's a summary. I would say that this is the best summary that I could see of the hearing that happened yesterday. So let's just check it out here. Citadel can see your stop losses. Keep that in mind. I had a financial advisor friend who told me, he told me to sell at 200, and I said no. 200 came and went, and this was last week when the price of GameStop went up to about $350 a share before coming down. He told me to put in stop losses, and I did. And then I removed my stop losses, which I'm happy about. And why is that important? Well, Citadel can see your stop losses. Remember, they own Robinhood. Now, when I say they own Robinhood, I don't mean literally they own it, but they make a lot of money off of the data that they get from Robinhood, because it's like they have insider information. They know our minds. And so if you're on Robinhood, you have stop losses. If you're anywhere, you have stop losses. They can see your stop losses and thus exposing the floor. So take out your stop losses. And if you panic sell, fine at any point, but don't let them have any insider information. Secondly, Wall Street is scraping Reddit to aggregate retail positions. I mean, we've been talking about that already, but why wouldn't they? It's like really frustrating right now because we can't sit inside of a boardroom at Citadel or at any of these hedge funds, but they know our playbook. They know that we have been looking to March 19th as this mystical day when what would happen when the price of GameStop would shoot above $800 a share, causing a gamma squeeze, causing a short squeeze, causing FTD squeezes, causing the mother of all short squeezes. And so what are they going to do? They're going to do everything they can to prevent that from happening. And maybe in their minds, they think that we're going to sell. It's like, well, we didn't sell when the price got down below $40 a share. What makes you think we're going to sell now? But this mindset of thinking of it short term is going to be detrimental. Thinking of GameStop as a specific date, it has to happen, or everything we've believed about GameStop is just a lie. It's like, no, that is not the truth. The day will come. You have to be patient, sooner rather than later, hopefully. But if not, the day will come. So always own some GameStop. Maybe my position has increased or decreased over time, and I know how some of you feel about that, but I like the stock and I'm holding, and my grandchildren will inherit my GameStop shares. So, what else? Citadel can see the market direction and trade ahead of retail traders through order flow. Not surprising. There's a very high likelihood of naked short selling. I mean, they want to win, and they might get wrecked. We'll see. I don't know. Shorter T+1 settlement cycle could remove large amounts of risk from the system and would have allowed retail traders to continue to buy in the first peak due to lower capital requirements. So that's a good thing. And we have information about the DTCC rule change, and so I'm going to be reactionary to that. We'll see what that means as far as FTDs needing to... what am I thinking? As far as positions needing to be closed quicker for hedge funds. So let's see. Citadel represents 47% of all retail volume. They are a monster. Some witnesses are of the opinion that the removal of Citadel tomorrow would have minimal effect on market execution. Others disagree given their large position in retail execution. I don't know what that means. If anyone of you watching has information on that, please let me know. CEO of NYSE says the experience of retail investors was uneven depending on the brokerage during the January volatility. Whatever, it doesn't matter. Essentially, here's the takeaway from this. Don't post your positions. Remove your stop losses if you trust that Citadel isn't sharing information to other parts of its company, and in future, turn off share lending to make it harder and more expensive for people to borrow in short shares. All of those things should be true of you. There is plenty of information as to how to do that last part, the turn off share lending to make it harder and more expensive for people to borrow in short shares. And so if you haven't done that, do it now. If you have Robinhood, there's instructions on how to do that. And so here we are, the quadruple witching. And what do we say about this? Do I have any negative feelings towards you? Hey, it's Pixel. If this prophecy, I wouldn't call it a prophecy, this research-based thing doesn't come to fruition today. No, I don't. I thought his analysis was well researched. I thought he provided things that was good and eye-opening for me, that just helped me in the long run hold my positions and not get worried about short-term things. And so no complaints if this prediction of, hey, it's Pixel, doesn't come true. Now here's the thing, the big thing that I took away from this, that I really, really am curious about, and that is XRT. So he talks about XRT. I have it highlighted here. So XRT rebalancing. Oh man, this isn't it. Let me go all the way back up. So here, point 6. This is the big thing that I'm looking at right now. I mean, the quadruple witching, all of that, yeah, that's a thing for high volatility. But 6 here, XRT rebalance. They will probably throw out GME. Now, probably, possibly, I don't know what extent we're talking about with GameStop, but this is very important. And this is something that we need to keep our eyes on. So this is a theory, he says, but that would force the shorts to cover all of their positions in XRT on that day. XRT, the last I checked earlier this week, had a over 100% short position, short float. And so that's important, because if XRT, they're rebalancing today, and if they decide to throw out their GME position, which they have to do something with GameStop, then that will force the shorts to cover all their positions in XRT on this day, whenever that happens. And so what do I mean by XRT rebalancing? Here's the problem that we need to talk about that's really important, that you think about. If we're thinking about this through the XRT ETF lens, it seems like a no-brainer to me that they have an incentive to get rid of GameStop from their ETF. So ETF that lost 80% of assets in GameStop drama faces new turmoil. So there are some things in this article that are very important, and it's just things that we need to keep in mind. The company, GameStop, now makes up about 5.9% of the fund. It should be more like 1%. And so we see this wild volatility with GameStop. We saw it go up to $4.80 last month. We saw it go up to $3.50 this past week after going down to $38 a share. And that's not something that the ETF is particularly excited about. It's like, if GameStop wants to increase in value and just keep increasing, great for XRT, but these wild swings, that's causing them to lose money. So GameStop is on another tear, surging roughly 50% on Thursday after a 104% gain the previous day. Okay, this article is a little old, and so it's even more of a problem now. But that's a problem for XRT because it's supposed to hold an equal amount of each stock, but it doesn't rebalance swiftly enough to cover GameStop's jump. And so the company GameStop makes up more of this ETF than they ever intended, and so they have to do something. They have to do something. And so what does that mean? Maybe that means that they just get rid of GameStop altogether, which puts the shorts in an uncomfortable position. So investors in XRT have seen this movie before, with GameStop quickly dominating the normally equally weighted portfolio before falling sharply, said Rosenbluth, CFRA's director of ETF research. With no limits on it, position sizes, and the rebalance nearly a month away, so this is about a month old, the risk is high that the stock will drive performance up and down. Some may not want to stick around to see if the sequel is any better. So this puts XRT in a very uncomfortable position. Will they get rid of GameStop entirely? Will they make adjustments that force the shorts to do something? That's entirely possible. So if you're watching this video at this moment, my guess is that GameStop has not shot to the moon, that nothing crazy has happened. And here's the thing I want to say to you. That is okay. Have patience. I know that most of the people holding this stock are young, that they're millennials or Gen Z. That millennial is probably on the older end of the spectrum, which is mind-blowing to me. But man, the investment strategy, my favorite investment strategy is to buy and hold forever. Especially if that's a dividend yielding stock, the power of that compounding over time is just something that is magical. And so if you are young, if you're about 20 years old, there are two directions that you should be going. Extremely conservative, buy and hold forever, especially with Bitcoin and with crypto, or extremely aggressive, because if you make mistakes, you can recoup that in a short amount of time. So all that to say, patience. Be patient. The reward is coming. When? I don't know, but you've got to be prepared for us to be talking about GameStop for a long, long time. Maybe not. Maybe all of our wildest dreams will come true sooner rather than later. But anyway, if you like this content, like and subscribe to the channel. Have a great weekend. I will most certainly be seeing you in another video. Peace out.